Okay, I think I'm going here. Um, what I'm going to do today, and I might do it quite a bit for the rest of the semester, is spend time looking at your guys' companies, trying to help you out a little bit, maybe with these final projects. Now, while I may be discussing somebody else's company, a lot of the things that I may talk about could be relevant for all of you. So, pay attention, watch for some of the things that I look for. Um, I'll probably concentrate when I'm doing it, although I may bring in some annual reports and whatnot. I'll probably concentrate on just the basic information that I can get at that FINRA site, okay? But I'll say this 20 times between now and the end of the semester. The information that's on the FINRA site is inadequate to finish your final paper, okay? It's a great starting point. It's going to show you some things that will help you dig a little deeper, but that's the whole point of this, is that you will dig a little bit deeper then and find some other things that may be going on with the company that you have selected. So one thing I saw, a couple people asked me and they struggled a little bit, so just real quickly, again, I think the best way to get to that FINRA site, you can type in FINRA in your search engine, and then you got to go to tools and calculators, and then market data, and then equities and options, I think. Okay, but if you come to the content section here in your business finance, bright space, you come up to, go to project 2. Right at the very top, there's this link for the FINRA site, and if you click on that, it takes you right to the page that you're going to want to look at, right? And then you enter in the ticker symbol. You can also type in the name of the company, and oftentimes it'll come up, okay? But if you know the ticker symbol, that's in, you should, because that was part of your assignment, right? So if you know the ticker symbol, you click that in there, or type that in there, click on it, and away you go. Okay. Today, the company I picked, I went with John Deere. I picked John Deere because they've been in the news lately. Anybody know why they've been in the news quite a bit lately? Jan, you know? Oh, you guys got to start following your companies, okay? John Deere's huge in the news lately because they got a strike going on. Their workers have struck. I think 10,000 plus workers are on strike. Get the last offer I saw, get this, I think they were offered like an $8,500 bonus just for signing the new contract, a 30% increase in pay over the next 3 years, something to that effect. I may have these numbers wrong a little bit. I'm kind of going off the top of my head. Okay, huge. I mean, it was just this huge package, and the workers still voted to decline that package. Why are they striking? Just higher pay. They just want higher pay. They just want more pay. No, it's not. It's not related to the vaccine, as far as I know at all. It's just related to higher pay. Workers are in a great negotiating position right now because nationwide, people, businesses cannot find help. Right. So it's tough. You know, that's going to put some pressure on these companies, and that's what's happening with John Deere. It sounded like the vote originally was 90% to go on strike. When this last proposal came out, 55% of them didn't approve it. So it's obviously narrowing. There, you know, if John Deere can get a little bit more out there, they'll get her settled. But the numbers on that to me were just staggering, and I don't know what their average pay is right now, but you'd have to guess with that kind of an increase, that's going to throw them up over the probably six figures just for maybe a typical line worker or something, you know, which pretty amazing. So it should be $50 an hour, you know. I would guess well over six figures if you count benefits and stuff. You know, you start throwing in some medical, those types of things. Anyhow, so they've been in the news. How's that going to affect your paper? Maybe not a lot, because for one thing, you probably don't have enough recent statements, you know, that have been put out that you're going to be able to analyze and say, oh, geez, this really hit their business. Now, next year, this strike is probably going to have a huge impact on Deere's stuff that happens this year, right? And maybe in the future years in terms of their increased pay and those types of things. So, it'd be meaningful, definitely. But, the important thing here, I kind of want you guys to pay attention a little bit to the news with your company. Gosh, if you just Google it every day and see if there's something in the news, some things might come up that may have an impact on your analysis. So we come to the main page, and this is just the general quote that we have. Not that there's not good information on here. There can be some good information on here. They're actually up a little bit today. Their price earnings ratio by right now by S&P standards is actually kind of low, which is not surprising for a traditional company, a traditional industrial company. Okay, we don't expect them to grow at really, really, really tremendous rates. I'll bet you when I look at NVIDIA, I think Marty picked NVIDIA, we're going to see a price to earnings ratio that's way, way higher than John Deere's. Okay, yeah, we're not comparing apples to apples here, right? NVIDIA is a high-tech company that is probably growing pretty dramatically. I would expect that they are, okay, versus John Deere, which makes tractors and heavy equipment. Solid market, solid business. John Deere's probably a great company. We'll see here, right? But just not growing, okay? And we tend to see higher price to earnings ratios when we see faster growing companies. Again, price to earnings may not be something that's a big deal in terms of your paper. It may, in the end, in your final conclusion where you make your decision, it may have some impact on that, okay? So I clicked on the financials, and that kind of takes me to this basic one. There's not a lot on there that, I shouldn't say there's not a lot, there's quite a bit on there, but it's a lot easier to click on the income statement, or a lot more, you get a lot more information if you click on this income statement and you see what's going on, okay? So what are the things that you're going to report on? Well, we kind of went through that a little bit with the outline, and the basics are fine. Don't forget the basics in your paper. That's probably going to take up a decent amount of your report, right? Geez, they've had growing revenues for the last 5 years from 26 billion. I'm guessing that this is billions. USD in million, except so this is billions, right? So 26 billion up to, at the end of their, actually they are at year end. Their year end just finished, so you might actually get some information. I don't think it should come out here in November. Probably won't be in time for you to add it into your report, but you do have the trailing 12 months information. So, from 26 billion up to 42 billion in 5 years, that's actually some pretty good growth, again, for a traditional industrial type of a company. And when you consider some of the things that we've gone through, 2020 was a down year, okay? Why do you suppose, and these are the things, it's one thing to tell me it was a down year. The next thing I want to know is, why do you suppose it was down in 2020? Pandemic, probably, okay? But, again, I don't want to speculate. What I want to do is pull out the annual report, get to that little section in the annual report that the manager's probably going to tell me, geez, 2020, we were under pressure due to COVID-related things, right? Okay, so you add that to your report. Their cost of revenue, sometimes the absolute dollar amounts here just aren't as good as looking at this, okay? So they got kind of a high-cost deal. Wow, that makes a lot of sense. Okay, they're in an industry that makes a lot of equipment. They probably all their labor, their steel, rubber tires, the whole works that goes into it. It's pretty expensive, right? So their cost of sales pretty high. But you know what? Look at the trailing 12 months. Ooh, that's come down. Believe me, the people that are on strike, they're looking at that and saying, yeah, it's probably because we haven't had a pay raise for a few years. I'm sure that's what part of their arguing point is. So then their gross profit has gone from 27 to 31. That doesn't sound like a lot, right? But take 4% of, what is it, $42 billion. That's quite a bit of money, right? 1.6 billion, would it? Something like that, okay? So these percentages, while, when you guys are writing up your report, remember that just because it changes 1%, remember Walmart sells like $500 billion worth of crap every single year. If they can change their gross margin by 0.5%, it's a hell of a lot of money, okay? It's a hell of a lot of money. So, they deal with fractions of percent sometimes, and so kind of keep that in mind. I toggle back and forth a lot when I'm looking at these between the dollar amounts. Research and development, pretty steady, okay? Went down a little bit. Sales and general admin, probably gone up in relation to the revenue, right? 11, it's actually come down quite a bit, okay? So what I can come to one conclusion already that I want to put in my paper. That is that over the last few years, John Deere, especially in this last year, these trailing 12 months, they've really done a hell of a job of controlling some of the cost side of the equation, right? So their cost of revenue's gone from almost 73 down to about 69, so they're saving 4% there. Their total operating expenses have gone from 18.9 down to 14.3, so they're saving over 4% there. They got 8% savings now between their cost of goods sold and their operating expenses. Holy cow. On $42 billion in sales, we're talking about some real numbers. Again, those are the numbers that the strikers are probably pointing out to John Deere. And that, here's your 8%, right? It's taking their operating income from 8% up to 16.8%. So they've doubled their percent for operating income. Man, I already got a lot of cool stuff, and I haven't even finished with the income statement yet, right? Okay. And again, I'm gonna pull out what's caused the decrease in sales and general and administrative expenses. I don't know. This doesn't tell me that, but I need to know that. Okay. What's caused the decrease in their cost of revenue? Where are they achieving those savings at? Those are the things that I kind of want to know. Okay. So their income before taxes, their provision for income taxes. Okay, great. So we're seeing some great improvements in their income. Again, we had a little fall off here in 2020. Okay, I can only guess right now that that's pandemic related, but we're going to want to take a look at that. But look at their earnings per share then. From $4.83 up to 17. So they've quadrupled in 5 years. That's like a wow. We all probably are going to wish that we owned a little John Deere stock, is my guess, if I looked at it over the last 5 years. Okay. Sometimes that can be because they're buying back a lot of stock. This is something I want you all to look at for your company. It's not really the case here for John Deere. They had 315 million shares outstanding. They have 313 million. Kind of went up and down a little bit here. Okay. Sometimes those are stock options, other things, when you see little changes like that. But it's not a dramatic change. So in John Deere's case, it's probably nothing. But you guys need to look at that because some companies are aggressively buying back their own stock. Okay? And so you just want to look at these weighted average number of shares outstanding. Again, I've just looked at the income statement. I've already seen quite a few things that are kind of cool that I just need to research a little bit. I'm going to look at their balance sheet, see if some things here are going on. Cash and cash equivalents, well, we've almost doubled those. That's great. Receivables, inventories. Sometimes, inventories, while that's a current asset, and that can kind of look good on the balance sheet, it also can be a negative, right? If you got this huge build in inventories, it might be because you're not selling crap, and it can create some problems. In this case, it's, nice. They're actually kind of low on inventory. It looks like they need to get busy and build some. Okay. They had a big jump up in inventory here, so they've kind of been selling it off. Gross property and plant, you wouldn't expect an older established business to have huge growth there, and they don't, but some. Okay, so they're obviously still expanding. They're probably putting money into existing facilities and those types of things, but we might want to take a look at that. I don't know. They may be building in other countries to expand in other countries geographically. That could be happening, so we kind of want to take a look at that. Accumulated depreciation, that's just a factor of their property and plant. So net, again, it hasn't changed a lot. That doesn't surprise me. In a fast-growing company, you may see big differences there. We go back. I'm going to go back to that gross profit thing a little bit on the income statement. Sorry to digress. What do you suppose Facebook's cost of goods sold is as a percentage? Do you suppose it's that 75% or whatever? Oh, yeah. Yeah. It's just a fraction of that. So, again, you got two completely different business models, right? And so that's why sometimes you can't compare, not sometimes, always you can't compare apples to oranges here. You got to try to get some apples to apples comparisons. So don't try to, Facebook shouldn't try to compare itself to John Deere because they're just two completely different companies, right? Short-term debt, haven't done a lot there. Total current liabilities, up a little, but, their sales have gone up, 60, 70% maybe in the last 5 years. You'd expect that they're going to have a little higher current liabilities, right? Total liabilities, same thing. It's gone up a little bit. Not a lot dramatic here, but we want to take a look at that and see, like I said, are they reinvesting some money back into some facilities? Are they doing some geographic expansion? Are they doing some things like that to try to drive sales? They may be opening up some markets in Brazil or someplace differently, and we kind of want to see if that might be the case. It's not huge, relative to the size of John Deere, it's not a huge thing, but we want to take a look. So total stockholders' equity on a book basis. Remember, book and market value are two completely different things. Book is the accounting value. Market value is what shareholders or people out here like you and I think that it's actually worth. Okay, total stockholders' equity is about $13 billion, I'm sorry. I'll bet you its market value is in the tens of billions, higher than that. Okay. That's typical for most of our companies. The cash flow can be important to look at for different things. You got net income, you add back in depreciation. We did some work on that, right? Deferred income taxes. Change in working capital. So they had a big change in working capital in 2018. Wonder why. It decreased their cash. Okay, that means that they might have had a build in inventory. They might have had a build in receivables. We could kind of go back to the balance sheet and see in 2018. And they did, right? They had both a huge build in receivables and a huge build in inventories. Okay, so that means money went out to make those things, but the money didn't come back in. The cash didn't come back in, and that's why they had a cash flow deficit really in 2018 for those reasons. Change in working capital is a product of those two things. It was right below. I didn't even have to go back. I could have looked at that, right? Okay. Investments in property. So again, kind of just this consistent. My guess is that they just consistently are doing some upgrades, changes, and those types of things, but you got to change that. But look at here. They had an acquisition in 2018 too. And, these little ones are, they're probably minor. I don't know if you even want to look that up. It's probably just a little bolt-on or add-on thing that they acquired, maybe a facility here or there or something like that. But that one's kind of major. They acquired something for $5 billion in 2018. We may want to see what that is. Okay, and so that shows up on the cash flow. It didn't show up really on the other statements, but it does kind of show up on the cash flow. I can see that they did that, right? Purchases of investments, pretty consistent, not a lot going on there. Sales and maturities of investments as well. Debt issued, it looks like each year, they're paying off some debt and they're reissuing some debt. Not huge differences there, okay? Again, you go back to the balance sheet and we saw that their debt was increasing a little bit, but pretty much in concert with how they're growing revenues and those types of things. They have this effective exchange rate. Not a big deal. Some companies might see that. I kind of doubt it. That's companies with a lot of foreign business. And John Deere does a decent amount of foreign business, but not a tremendous, probably not as much as Caterpillar, I would guess. So change in cash, and we saw these things up there, right? The minus cash in 2018 because we had the big changes in accounts receivable and inventory, and we also had that acquisition. Those are the three things I would focus on then for 2018 that I probably need to go find. Okay, those are the three bigger things that kind of were a big deal. On the other hand, we had positives here, in 2017, probably just the opposite. We probably saw some positives in, no, those were still negative. So where were our positives there? Debt, probably a debt. Okay, so they actually took on a bit of debt maybe. That gave us some positive cash flow, was probably the biggest. Okay, so I've gone through those three statements. I also may want to take a look at the ratios here. I ask you guys about ROE, ROA, because I think those are kind of important. I find ROE, for me, is more important than ROA, but these are good numbers. Return on equity, remember, I'm a shareholder, so it's my equity, and they're returning 38% on my equity. That's pretty good. And it's gone up from 23% 5 years ago. I don't know why they have, some of these statements go from left to right, and some of them go from right to left in terms of the years, so you got to kind of pay a little bit of attention as you're doing that. But look at that big jump from 2020 to the trailing 12 months, and we saw some interesting things going on in the trailing 12 months. And return on assets, kind of a similar story, right? There may be some other things in here you want to kind of take a look at. This has like your gross margins, but we saw that on the other page. So some of these come from the other page, but your ROE and ROA don't. Okay. Again, the ROE for John Deere is going to be completely different than the ROE for Facebook, or the ROA especially are going to be way different because of how they conduct business. John Deere is a capital-intensive business. It needs lots of equipment. It needs facilities. It's got to build plants, and it's got to build things. Facebook, they got a little building and a bunch of people running around like ants, right? Okay, and that's kind of it. And they're gonna start farming some of that out to people who are gonna stay in their own homes. So they're gonna need even less office space probably in the future, right? So a couple different business models there. Any questions about that? These are things get looking at now so that if you have a question that pops up, and again, we'll go through lots of people's businesses here as we go through this, but as a question pops up and you see something, you go, why the hell did that happen? Okay, we'll take a look at it. Every now and then something funky comes up. I know I had a gal here years ago, she did it on Weight Watchers, and holy cow, I had to spend hours trying to research this one funky thing that was on their financial statements, but I kind of enjoy doing that, so. Right, so if you find something like that that intrigues me, that's great. I'll do a little research and help you out because I kind of enjoy doing that. So, questions? Okay, I'll quit and let you guys go to work. You got due today are your outline, right?